Master your emotions, master your risk smart, win big.
What's up everybody, welcome back to RoyalBluFX. In today's video, I really want to talk about why supply and demand is not a lie. Because at the end of the day, the markets are just a perspective base. You can see the markets the way you want to, right? But in this video, I'm going to really drop it down and show you guys that supply and demand is not a lie, and supply and demand is actually king. So without any further ado, let's begin with this video. Alright guys, so as proof, I'm going to show you guys that supply and demand is not a lie. You guys can trade supply and demand just as anything, right? We use supply and demand every single day. That's our main strategy, right? But a lot of people obviously have a ways to trade supply and demand, right? They always have a different interpretation of supply and demand. So I wouldn't say it's the holy grail for trading, but because nothing is, right? Nothing is the holy grail in trading. However, supply and demand does show consistency, and supply and demand also works based on order flow, right? If you put all the metrics together, you know, with higher highs, higher lows, break of structures, supply and demand, everything comes in great congruent strategy, right? So anyway, let's just show you, just kind of give you an idea of how we trade supply and demand and how we see it. So let's give an example here when we're going bearish like this, right? A lot of people do this, right? They just simplify, you know, structure, and obviously we're doing it right now for a good reason, obviously. But anyway, right? There's higher highs and higher lows doing this, right? Now everybody knows to get in, right, off of every high, right? If this was this easy, everyone would do it, right? Unfortunately, we know supply and demand isn't as easy, or any other strategy in this case is not as easy as we'd all like to think, right? So anyway, what happens is when price goes above a high like this, right, that is sweeping a high, right, which is liquidity or an inducement in another case, right? And prices continue to run lower like this, right? So you can argue and say that yes, you know, the market isn't a supply and demand structure base, or it's not whatever you want to call it. But in this case, I would say that it is still a supply and demand. The only reason why is because you had a high here, right, that put in the low, right? You can interpret this the way you want, right? But it put in a high and then it put in a low here, right? You see there's two breaks of structures, obviously, but we'll get into that in the reasons as to why this happened, obviously. This could be the inducement right over here, right? Price comes above, taps the supply zone, right, and then runs the low. Now, in a lot of other videos, if you guys have ever watched, whether from us or from other channels, right, you probably understand that when price does go above the high, that is the liquid sweep, right, and that this move, this impulse that runs low like this, is essentially the swing high. So you would say that this is your swing high, right? This means that a new high has built in the market, and therefore we are looking for the range to create, sort of something like this. For example, when a high is taken, we consider this a swing high, right? Just like anybody else that does structure. So you can see here that a swing high is created, right, when prices are retracing, or at least breaking a low like this now, breaking another high, like an old internal high like this, right? Now you have what's called a range. You built a range, a high to a low, right? It's considered a range. And this is confirming us that we are waiting for prices to retrace, whether that be in the 50 EQ or the 80 to 90% retracement, right back into the high right there, right, in order to continue price bearish. So in this case, you could argue and say that this is also a supply zone, right? I mean, you know, something like this, right, and then price continues, right? So there's so many times, and I'll show you two variations of essentially how to draw out your supply and demand zones. I'm not going to give out the whole sauce, obviously, because a lot of it's for paid members and for you know, for our students, obviously. But I'll just give you just enough so you understand how we draw out your supply and demand zones, okay? Because there's multiple ways to do it. This is just one of the effective ways to do it. Okay, and then you can see how price now runs bearish, right? So you can see that I just want to kind of give a detailed description and an idea as to what is actually happening here? You can see that price has been moving in a order flow fashion here, right? The low comes over here, takes out the high, which means that this is interrupting price action, right? It's interrupting the flow, which means a lot of traders are waiting here now to look for buys, right? But in this case, if you understand that the direction is bearish, then you don't need to be looking for buys here, right? You don't need to be looking for buys over here, because we understand that most of the time, 99% of the time, it's just going to fake it out and then take price lower, right? And take out the buyers who bought here and here, right? So this move, obviously, like I've been mentioning here, the one that went against liquidity, or it took out the high, took out the inducement, right, to continue, it is, in a sense, a supply zone, right? Everything is supply and demand. It's just seeing how you'd be able to interpret price action. Okay, so let's continue. So in this case, you can see that we made a new low here. Let's continue. Actually, let's bring this down a bit, right? And then we can continue bullish like this. So, okay, now when prices are retracing, right, anything can obviously happen, right? You can take another low like this, right? It can make a double bottom like this, take out a high like this. Anything could happen, right? But one thing we need to always keep in mind here is where's the high, or the previous high, and where's the previous low, right? So where's the previous high that made the break of the structure, or break of the low, right? And where's the previous low that is breaking the old internal high, right? Which would be here right now, right there. Right? And that's how you find out, and essentially, where your supply and demand is being created, and how you can follow the order flow based on supply and demand. Right? So this could happen, this could happen right here, right? We can see another push to the downside, right? Eventually, you can see that the structure here is creating what's called, what a lot of people would be looking at is a trend line, right? Eventually a trend line would create, right? Obviously, it's very typical because there's a lot of buyers buying in these levels. Eventually, price will just get tired of it and say, go run the high again, right? And then once it runs the high, we all know the typical response here is that when it does something like this, right, it takes out all the liquidity, and eventually, right, if you're following structure on the higher time frame, price could lead to another bearish move like this. Again, this is really important to see. It's important to see the higher time frame, obviously, and knowing that this could obviously happen. So let's just pretend, again, price is pushing bullish, right, taking out the liquidity, right, and then putting up a new low like this, right? So everything is also fractal, right? Supply and demand won't stick to one time frame structure only. It's going to have to sweep old liquidity, all right, in order to continue the market structure in its favor, in the bearish or bullish, right? So let's pretend this was right here. This was a another swing high, right? And this would be the major swing high, right? From a 4-hour structure maybe, right? Something like this, right? So what you're seeing here is, right, there's a break of structure, right? There's a bunch of internal liquidity, right? There's 3 types of structures is what I want to show you guys here, right? So essentially you see the main high to main low, right? The swing high to swing low right here, right? And then you're seeing the internal high, right? Here's your internal sub high, sub low, sub high, sub low, sub high, sub low, until price comes and sweeps the sub highs and sub lows, or at least the sub highs, right? And then continues bearish. So that's the second structure, right? Then you see internal structure, the microstructure that the sub high and sub low has swept. Say, for example, this right over here. You see sub high, sub low, just like this, right? And then you have the internal sub high structure, which is the microstructure being swept by the sub high, sub low, right? Like this, sweeping part of the liquidity, right? To continue, as at the end of the day, we know that price needs to continue in. It needs to take liquidity to go in one direction. So if you're ever doubtful or wondering, which high do I take? Which high or low do I take? Which supply or demand zone do I take? You honestly need to wait for the internal structure to sweep liquidity, right? Sweep liquidity, run the low, and then something like this, like we did here. Broke the high, broke the low, came down, ran back up. Right now we know this is the internal structure. The internal structure started here.
not from this high, but from this high. The only reason why is because this high was the one responsible to sweep all this liquidity to then create the new high, just like this, right? And then in return, you can see more structure, more internal structure, right? More microstructure in here, more microstructure in here, more microstructure in here, until we broke that sub high to push price bullish, right? And then to continue bearish. So now what you see here is not only did we create a major high to a major low, we also created another major high to another major low, just like that, right? So everything is fractal, but everything is supply and demand, and this is why supply and demand is not a lie. It is actually a factual, true concept that actually works all the time. All right, so this is just how supply and demand works, right? So let me just kind of go into the two examples that I'll show you how we trade supply and demand and how we trade it very effectively, right? These are just two out of a few others that we trade. In this concept, we're gonna go back to the part of the drawing, okay, where we sweep the high and then sweep the low. You can see here, let's just say, for example, price is consolidating, right? Anytime you have doubt about where price is going, wait for either liquidation or liquidity to create, right? For a high to be swept like this, right? And let's say we're going bearish, price sweeps out a high, breaks out the low, just like this, okay? Now, a lot of people I used to do this a lot. I'm not gonna go too far away from the subject, but I used to do this a lot where I call I made and created another strategy called the PLT-PHT theory. And what it did was essentially once we're going bearish like this, let's say we're going bearish, right? The only way we would enter is when price goes above the high and enter above the high to go bearish like this, right? And this is where the big moves happen, right? So it's not 100% wrong, but it's not 100% correct either, because if I was to enter here the way I did, right, and a lot of times prices would go bearish, right? Sometimes when I enter from above, prices go down like this, but then go whiplash against me and go against me like this, right? And a lot of you might be thinking, yeah, but RoyalBluFX, you're kind of wrong for doing that, right? Well, I'll show you why it is right, but it's also wrong, okay, in this diagram, in this example here. So back to this example here, right? We swept the high, right, and then we would normally enter from here, right? And we would enter aggressive, right? Just going right, price would run, right? But here's the better way to do it, right? Here's the confirmation way to do it. This happens a lot of times. Like, I'm telling you, 80 to 90% of the time, it happens all the time. When the high is taken, we're gonna wait for prices to reverse back inside the supply zone right here, right? What is this called, right? It's the supply zone. That's supposed to be a check mark, by the way. Okay, it's supposed to be the supply zone right there, right? So that is confirmation. This is confirmation that's saying that once price took out the high and the low, this is confirmation, right? So now I would be in a confirmation entry right over here, just like that, right? And then we could look for prices to go bearish. Why? Because if we're trending and we're going bearish, right, just like this, right, that means that we've taken out the liquidity from the buy side, right? Like just like that, and then now we took out the liquidity from the sell side, and now we're waiting for price to come back, right? Because now everyone is trapped here. The traders that bought here, right, who are buying, who are breakout traders, are trapped up here, right? Then you have then you have break and retest traders here that are also trapped as well, right? Which are forced to obviously take out their stop losses right here, right? Same here, like there's the breakout traders that put stop losses here, and break and retest traders that put their stop losses there, right? And then now price runs, comes back to mitigate, right, the order block to continue, right? This is how it always works. So anyway, this is one of the most powerful strategies that we love, that we always depend on, just like this, right? And so I'll show you guys sort of another example, or the same example, but we'll continue from here. Let me just do this here. Let me even go backwards just to kind of make it a little more neater here for you guys. Okay, let's go back here, right? So it comes back just like this, right? So we can repeat the same process again. Anytime price shows us liquidity, right, you wait for price to obviously show you the liquidity and wait for irregular price action to show, right? So something like, like this, right? And then if this happens, now you understand where liquidity was swept, right? You don't necessarily have to focus on it so attentively, right? Like you can see there's a high, there's another high, there's another high here, right? This is all liquidity, obviously. Everything is liquidity. However, price decided to take out this high, right, and then run bearish. Now this confirms and tells me that price needs to get back here. At least we'd like for price to get back there, right? And then we'd wait for this. So let's go back here. We'd wait for this, just do this, just to continue price action like this, right? And this is supply and demand, right? And it's at its finest, examples, just like this. So obviously the first example that we showed you was, a very irregular, price action where people are buying and selling just like this, right? And this is too good. If it was too good like this, people would always be trading. But that's not the case. The case is this. This is trading. This is structure in supply and demand. Supply and demand, right? So another way we do it is this. So this is the second example. When you have supply and you have demand, like this, all right, and then you have, let's just say again, for example, we're going bearish here, right? Just like this, right? We tap a demand zone. Price runs back up the high. I'm going to do this quickly here so I don't bore you guys. Okay, right there. So now that we have supply mitigated, right? When prices is going bearish, this is what a lot of people don't understand. But I'm about to show you guys here in this video right now. Okay, a lot of people don't understand that supply and demand is really just an interaction between both buyers and sellers. So that what we want to do here is find where the interaction are. So what is it? What is the interaction, and how can you see that visually here in on the charts, right? Well, it's where supply and demand is, right? So right here, you can see there's demand taken, right? A lot of traders would come up here and say, okay, let's buy here, right? Just like this. Price will fail. Now, oops, let me get back that. Let me get that back out of here. Okay, just like this, okay? So a lot of people would start buying here. Why? Because they think price is bullish here, right? We can see from this low to this high, we're in the premium side of the market right here, right? So people are trying to buy in the premium, so therefore prices should fail. At least we expect it to fail, right? And another thing is you can see that we're in the supply zone, so it makes no sense to continue buying in a supply zone when a previous supply was respected right over here, right? It makes no sense. So why buy here at this demand, right? So how we do this is we call it both reactions and flips. There's reactions in the markets and flips in the markets, okay? So just like this, this is called a flip, right? The low here to the high, once it mitigated the supply, you can see it broke the low. This is the first flip. The flip is the first weak demand that didn't break this high, right? And price flipped. This low here was supposed to run on the high and break this high, but it flipped. And now we're anticipating for it to come back here to the supply zone, right? Just like that. Now this would be the flip. And then here, right here, right, you can see how a lot of people are trying to buy from these areas, for whatever reason. Their indicator says so, it tells them to buy from here or whatever, right? So people will be buying from these demand zones, right? So they'll go like this, right? And then what happens is once people are buying, they're giving us their buy, right? Their buying order, right? So they might profit, right? Maybe they're trying to hold it all the way to this high to break the high, whatever, right? But instead, I'd be here selling because this is the next supply, right? Zone, right here, right? And now when price breaks the low, right, we're anticipating for prices to continue bearish. Now, let's focus on the first concept that I showed you about supply, right? How right now, if price is like this, right, stuck like this, what are we expecting? We'll expect for prices to come back to this next demand zone because this is the next one that hasn't been retested yet, right? And there's interested buyers. There's always buyers and sellers interested in supply and demand zones. You just need to learn how to read them. So right here, okay, so what would my anticipation be here? Well, what am I looking for? Okay, I see this happen, right? Once this happens, right, and you're like, oh, how can I get into this trade, right? Watch what happens. Price does this. What did you learn from the last example that I showed you, right? It takes out liquidity, just like that, right? We took out liquidity, just like that, right? So now I get confirmation that this is my supply zone right here to continue price bearish. So whether it comes here first or, comes here, breaks this internal low, right? We're anticipating the price can come here to continue just like this, right? Now, in theory, all these demand zones need to fail, because if we're respecting the supply zone, then in theory all these demand zones should fail, right? So in this regard, right, if we're selling from here, right here, if we're selling right there, right, we want to target the main low right there. And the reason for that is because, again, in theory, if prices are supposed to go bearish, then in theory, all internal demand zones have to fail. They have to fail, right? Or at least we're anticipating that price can do whatever it wants to, obviously. But if you're in the right, if you have everything right, you know, all your metrics and everything, all your structure and everything like this, your supply and demand zones and everything, then things should work out in terms of, you know, the way the structure always works out, because the market always does what it, you know, it's on repeat. So let's continue here, right? You get price doing this again. Maybe there's buyers. Sometimes price just even runs right through all these demands. It doesn't have to respect any of these demand zones, but price can run through them. But let's just say, for all good faith, that price does respect, right? Where does it go? Right back to this supply zone, right? Why? Because this was the supply that was created last. It broke this demand zone. That means this supply will be next to continue, right? Price comes back here again, right? Probably comes and plays around with this demand a bit, right? Gives us another pullback to then continue bearish, right? So you could have shortened this this market or price like this, right? From these. Let me just delete this, actually. You could have shortened it from these, right? From these supply zones, just like this, right? Just like this. Just like this example. See how price swept the high? And I'm only looking at bearish moves, right? I'm only looking for supply. I'm not looking for any buys, right? Because a lot of people start to wonder, like, what's going on here? This must be a buy because this is a demand zone, right? And people think prices should continue bullish, when in fact we're still bearish because this supply respected this supply. This is key. This is the key right here. The key zone is, or the key supply zone, right, is holding price. Until this is broken, we are not buys. We are bearish. We're wanting to sell here. So then we look at the internal structure to sweep, then to break the low, right? Then to come back to continue, just like this, right? So what we're doing is we're trading away from liquidity. All right, guys, if you had any questions or comments or concerns, please go ahead and comment down on the comment section below. I'd like to hear from you guys, see what you guys are thinking. Until then, if you guys are new to this channel, go ahead and subscribe, because we always give out free content, right? Who doesn't like free content? Anyways, guys, I love you guys. I'll see you in the next video.